Hello everyone, today we are talking about XRP and the infamous tweet that's been, recited time and time again when it says, David Schwartz, it can't be dirt cheap, referring to XRP, taken out of context. The inspiration for today's video, I saw David Schwartz tweet, I think it was a couple months ago, a couple weeks ago, stating that he wished he never even tweeted that because it's been taken out of context so much. It's funny though, because I do agree in terms of supply and demand. That's what I'm going to go into in today's video. These very high price points, being a bridge, high transfer value when it comes to the billions and even the trillions going forward. But he has other tweets. He has tweets where he talks about XRP going to $30, but that's never mentioned because it doesn't fit the actual narrative of 10k or 50k or $1 million per XRP. So we're going to go in detail with context, what it all means, and actually sort of agreeing but not agreeing, right? So you might see me sway from side to side, but taking the two different opinions of extremes and coming to some middle ground when it comes to correlation between liquidity and price, being an instrument of value when it comes to liquidity, and then tokenization of all of these financial instruments, and then when it comes to volume and price, and in relation to the XRP ledger and AMMs. Lot of value in today's video. Stay around to the end, and without further ado, here we go. Okay, so just before we go into any information, firstly, the links are down below for discounts on the DCM wallet. The actual discounts are still here to $100 per wallet for one wallet and $179 for two wallets. Obviously, Christmas is past. We're going into 2023. You're probably watching this video in 2023, but still a good present for birthdays in January or just for yourself. It supports XRP and the majority of cryptos that you probably hold if you're interested in utility aspects or utility cryptos. Links are down below. So firstly, let's read it. So, David Schwartz, it can't be dirt cheap. That doesn't make any sense. If XRP costs $1, they need 1 million XRP, which would cost $1 million. So if XRP costs $1 million, they need 1 XRP, which would again cost 1 million. So except that higher prices make payments cheaper. Right now you can buy $1 million house with Bitcoins when Bitcoins were $300. It would move the market too much and be too expensive to be practical. So higher prices make payments cheaper. He also states higher prices mean that same size payments will move the market less, making them cheaper. So higher is better. He is indicating it is more efficient at a higher price, but not necessarily saying it is 100% needed. But in reference to being dirt cheap, there is correlation between liquidity, demand and supply, and price. So he states here on the 20th of February 2018. So liquidity tends to correlate with price, and the more liquid XRP is, the more efficient the corridors we can target. A higher price / liquidity also means we can target higher value payments. This is true. So the correlation is, for example, let's just say it can't be dirt cheap where XRP is 2 cents and you're wanting to transfer in the tens of billions of dollars of value. It wouldn't be possible because there's not enough XRP. This is factual. I've said in previous videos it comes back to supply and demand. If the prices aren't going up, there isn't enough demand. There's no other reasoning for that. For example, the ODL is growing, I think, 8 to 9x every single year, but it's still retail-based payment service providers, one example here being Vinci, FINCI, not wholesale payments that we are talking about when it comes to these higher values. When it comes to perpetuating this tweet towards, sort of higher values, it doesn't make sense because when it comes to XRP being an instrument of value, and when it comes to liquidity between financial instruments like commodities, bonds, and whatnot, XRP represents the value of what is issued on it, like equity. So the price of XRP depends on the assets issued on a network. So to summarize the first part of the video, to give context to the situation, is that he has stated that higher prices mean that the same size payments will move the market size less, making them cheaper. The higher the better, the more beneficial. The higher the XRP price is, the more liquidity, less XRP needed to do transactions. Therefore, it's more beneficial. It is more beneficial to do this. And when it comes to supply and demand, liquidity, the reason the prices have not moved yet, I think Brad stated, I can't remember the exact number and I couldn't find the actual tweet, but he stated around there's only been $30 billion worth, transferred to ODL since its inception, which was 8 years ago. That's ridiculous. 30 billion, we are too early. We are before the volumes are here. Now I want to go into the second part of the video when it comes to going even further. I've talked about supply and demand, the ODL going up, but in terms of tokenization / price volume equaling price. If you want to hear more in detail in regards to the ODL going up with these wholesale sort of volumes, I talk about it briefly in this video in regards to ISO 20L22, and I talk about it in this one, XRP is gold, at the start on the beginning of the video. So here we have tokenization, right? So let's just say that we know the XRP ledger is the one-stop shop for everything. So say you want to sell commodities to fiat, it would pass through the XRP ledger. XRP acts as a neutral bridge and is done in instant settlement on demand liquidity. There is value there when it comes to stocks, these financial instruments like real estate, CBDC/fiat. And I want to go into the secret sauce, which is automated market makers, again by David Schwartz.
Execution advantages of the XRP ledger that I just mentioned, and a sort of secret sauce that will allow liquidity providers to get more of the profits normally lost to arbitrage, and it will be bolstered by incentive programs. Traders will get better pricing and better order execution due to integration with existing order books. They won't have to change anything they do. You'll be able to execute the same payment and trading transactions on the XRP ledger. You'll get more liquidity and better payment and trade execution.
This is huge in terms of the price of XRP and isn't spoken about too enough, because the automated market makers, liquidity pools, enable liquidity to be provisioned without the need of smart contracts. Therefore, the automated market maker creates demand not only to source liquidity, but to hold for retail and institutions. Here we can read, automated market makers are smart contracts that provide liquidity in the XRP ledger's decentralized exchange. Each AMM holds a pool of 2 assets, enables users to swap between them at an exchange rate set by a formula. As David stated, the automated market maker, the XRP ledger has a unique implementation when it comes to AMMs, allowing these liquidity providers to take more profit that would usually go to arbitrageurs. This is so huge. Going forward, software is the difficult part when it comes to certification and whatnot, but I'm really excited for the future of XRP. And in regards to the future of XRP ledger, bringing in DeFi protocols, lending, yield farming, everything involved. But that's pretty much it for today's video. To summarize, is it more beneficial for XRP to be at a high price? Yes, as I have stated. Is the price not high right now because it's being utilized or it's not being utilized? Yes, it is being utilized, but on a lower level, lower volumes, not the high volumes that we are talking about. Is ISO 1222 going to make an impact? Well, yes, it's going to widen the range of ODL compatible banks as stated in this video by an ex-Ripple employee. I think I will take his word over anyone else's. But it made this fun video. Thank you very much for watching. Please leave a like down below and I will see you guys in the next one.